Hi, good day. This is Darren Jones. I am Marketing Director for Celerity FinTech with DXC Technology, and thank you all for joining us today for our webinar From Legacy Core to Digital Banks, Paths Forward Towards Core Modernization. So to start off, I'd like to introduce our panelists for today. Our speakers are Thomas Demchak, Banking and Capital Markets Technologist for DXC Technology. We have Terry Rupp, who is the CTO of Celerity FinTech, and Scott Lorenz, who's Head of Global Core Banking Strategy and Product for Celerity FinTech. So a very strong panel today. We look forward to a great conversation. As we go through the process, what we encourage you to do is to use your chat window to go ahead and send us any questions or comments that you might have. And we will just try to keep this light and conversational. And we will be making a recording and slides available after the event is closed. So moving forward, the topic of today is really focusing on how financial institutions are heading towards the digital future. Everybody is looking for an operational transformation, how they're moving into the digital future, how they're looking to increase competition, expand markets, and diversify their customer segments. Ultimately, these are business drivers that everyone has, and large, well-capitalized banks are able to accomplish this a lot more easily, both because they have the resources available as well as the time to achieve it. But smaller community and regional banks are not as effective at doing this. They tend to be resource constrained, they tend to be time limited, and they tend to be risk adverse as they look at the process of getting off of legacy systems that have been in place for years or in fact decades in order to move effectively towards a digital process. So Terry, I know you wanted to chime in on this and sort of talk about what some of the industry drivers are behind why people are heading forward, and possibly some of the paths that they might pick to get there.
So Darren, thank you. That is an excellent lead-in. And what I would like to talk to you about this morning are, as you mentioned, some of the pressures and challenges that our financial services clients are facing and some alternatives that they're exploring as well. We're going to intersperse just to mix it up a little bit and make sure that we remain on target and focused as a company. We're going to mix it up a little bit with some poll questions throughout the next half hour. But starting off on things, I really want to just share, my perspective on what I've seen in dealing with financial services clients over the last couple of decades. And what I see is, competition for financial services mindshare is in abundance today. And that competition is only likely to accelerate. The entrance of challengers from non-traditional banking segments really only tends to amplify the need to change. And just think of what's going to happen, not what could happen, but what's going to happen when some non-traditional players enter the market, when Google, Apple, Amazon, PayPal, when they start getting their banking licenses around the globe. It's really going to vastly change the dynamics of things. So in my view, banks really have to adopt a fintech or an agile mode of thinking and action. Perhaps even more to the point, banks and vendors alike need to take lessons from the likes of Google, Facebook, Amazon in terms of how they've been positively disruptive in their industry. And I believe in disruption. I like disruption. I believe that you're either a disruptor or you're going to be disrupted. So unlike the companies that I've just mentioned, unlike Google, Facebook, Amazon, unlike those that I've just mentioned, financial services institutions have a variation of the same problem. They have a legacy to deal with for the most part. If it's not a brand new challenger bank, they have a legacy to deal with. And they're all racing toward a model of enhanced client centricity with largely a legacy of systems that are not designed or developed for that challenge. So a metamorphosis has to occur. Some will call this digital transformation. Others are transforming digitally, and they're just not their systems and methods are just not aligned. It's going to take an entirely new ecosystem of tools and software and partners to make this transition and this transformation a reality. And this is where DXC is rather uniquely positioned to deliver all three. DXC does have a vast network of partners, industry partners. We do use and develop best-of-breed tools, and we do deliver core banking software that addresses the needs of major financial institutions. We've got a 40-year legacy and growing in terms of being able to respond to this industry with our software solutions that address core banking space. Next slide, please. Okay. So the drivers of change, again, I really think of these in terms of disruptors. And when I'm talking to our own people internally, I ask them to adopt a disruptive mindset. Because if we're not being disruptive, if we're not disrupting ourselves, we're a target for disruption. So disruption's everywhere. I mean, if you look across industry drivers, the disruptors that are available in terms of new technology, technical innovation that didn't exist 5-10 years ago, just in terms of the evolution of SOA to microservices, responding to generational challenges and regulatory challenges. It's a bit of a dichotomy in some ways when you think about the pressures that are being placed on financial services institutions. There's a pressed openness, especially in the European Union, while maintaining very, very strict privacy. So there's a constant there's constant dynamic tension, if you will, in trying to deliver to that the business priorities in terms of digital transformation and personalization, customer intimacy, while you're developing a new growth model and a nimble FinTech model. The technical priorities involved in RPA, robotic process automation, applying more analytics so that you can deliver next best offer in a more timely fashion to your clients, become more client intimate, and just be predictive in terms of what your clients are going to need. These are really unique and different pressures that are being felt by our banking clients for sure. Next slide, please.
Hey, Terry, while we're moving on to the next one, can I just ask you a question about digital disruption? So what do you see, particularly as the drivers for change when you're thinking about disruption, particularly in a business that is not only 24/7, 365, but also, has to be so conscious about the, regulatory as well as the fact that they're maintaining, their customers' financial information. What's sort of the feedback that you see from the industry, particularly with like smaller banks, on how they're looking at digital disruption? Is it a terrifying thing? Is it an exciting thing? What's sort of the feedback that you see in the market?
I think you're going to find a mix. To be honest with you, those things that don't kill you make you stronger. No one typically embraces change, and these are huge sweeping changes that we're talking about. So, there are paths forward. There are various paths forward that people can consider, ranging from the more risk averse to those that are willing to go out on a limb and take a real leap. But the thing that you really do have to consider is that banks and banking software alike do share in this. They do share a rather common problem, and that is banks and banking software vendors alike will typically present one of three models, and maybe a hybrid that combines two or maybe in some cases all three. But they'll typically have in their portfolio of offerings or in their banking infrastructure today, they'll typically have a monolithic implementation for core systems, or they'll have a bit of hybrid approach that may have a monolith that's been wrapped over time with SOA and web services. What is becoming far more in vogue these days is microservices, a pure play microservices infrastructure, but there are a few that are offering that right now. And most banks that are considering it right now are looking to take as much risk out of the equation as they move forward as possible, so an iterative and incremental approach. So what this really does distill down to, Darren, is I see that there are really 5 options that banking clients have when they consider a path forward, and in terms of core modernization. And path number 1 would be do nothing. Do nothing to the core, but surround it with APIs. Now that really does not serve to modernize the core at all. What that does, though, is lights up some immediate new possibilities, some new opportunities, new channels, new analytics. The next option is raw rip and replace, and that's fraught with cost and an awful lot of risk to take what you have been running and know to be a stable platform and replace it with net new. The third option is really stand up a parallel core. And this is a trend that you are starting to see take hold, and actually in all ranges of banks, from smaller banks to larger banks. They're standing up an all digital presence that is alongside their legacy until such times it makes sense to cut over. The fourth option, and by the way, that's perfectly viable. I don't see any wrong answers in any of these. It's just a difference in approach based on what you're trying to deliver, your time frames, your affinity to risk, et cetera. The fourth option really is to surround that core, drawing on the API ecosystem that you built, and surround that core with fit-for-purpose fintech. So the like of Axiom and Zappan, et cetera, lend itself very nicely to opening up new channels. The fifth option, which really truly does address core modernization, and of these 5 options, there are very few that actually do address raw core modernization. So naturally, rip and replace does, standing up a parallel core does, and the fifth option directly addresses core modernization. And that is to take a rather measured approach, domain-driven design, for those that are familiar with it, actually lends itself very, very nicely to this, where you start domain by business domain, surgically slicing through your infrastructure and making changes. So extracting business logic to a new tier in your architecture, probably building a microservices fabric to serve that business logic. So at this point, Darren, I'd like to turn it back over to you to ask our attendees some polling questions relative to these 5 approaches.
All righty. Well, thank you so much. And definitely this is something that we'd like to see. I mean, those 5 options really create a very broad range. So we'd like to ask the audience to get involved at this point and let us know. So polling question is, of the options outlined for core modernization, which would you say your institution is doing or likely planning to do, let's say in the next 2 to 5 years? We've got the option, do nothing to the core and surround it with APIs, a total rip and replace, stand up new digital parallel core, surround the legacy core with fit-for-purpose fintech offerings, and surgically domain by domain slice through the core. So we're going to give you about 30 seconds. Please go ahead and click on the appropriate answer. And while we're waiting for the results, Terry, can you talk a little bit about, maybe for the audience that may be less technically inclined, you mentioned microservices a number of times. What are microservices in sort of layman's terms? How should we think about them?
Well, in sort of layman's terms, and I'm going to mix a bit of technology in. So the craze 10, 15 years ago was to go to an object-oriented model. And the whole goal is to break bigger bodies of work down into smaller executable elements so that change can happen in a more nimble way. And so, with the birth of object-oriented, it also brought us SOA infrastructures. Well, the there was a huge movement to SOA about a decade and a half ago, service-oriented architectures, about a decade and a half ago, but it had some frailties associated with it. Microservices, in the minds of many people, is simply SOA done correctly. It really does break things down to very small groupings of work that can stand completely independent of any other subsystem, such that when you need to make change to a microservice module, you only affect that module.
Excellent. So it's basically breaking things down from a monolith and really turning them more into Lego building blocks. You can pull out one block, put in another one, and enable a new opportunity. Well, let's see what the audience has to say about this. So results are, looks like we've got a decent percentage looking to do absolutely nothing to the core and surround it with APIs. So take the most path of least resistance, as it were. Looks like we've got about 12% that are taking the bold approach of a rip and replace, and about a quarter that are looking to surround the core with fit for purpose, and another quarter that are looking to go domain by domain. So we've got a pretty good mix across everything from do nothing up until take a more complex technical approach to it. Interesting that nobody replied on standing up parallel cores. So perhaps that's an area that is not generating quite as much interest in the marketplace today. Terry, thanks so much for starting us off. I'd like to hand over now to Scott and to kind of walk us through some of the ideas of what we're seeing in the marketplace today. And maybe even based on those poll results, I'd be curious to think, what are you getting out of that, and does that reflect your experience that you're seeing in the market?
Yeah, okay. Hey, thanks, Darren. Hello, everybody. This is Scott Lorenz. So I'm going to talk a little bit about what we're seeing in the market today. But first, let me turn backwards a little bit and kind of set the stage by what we've seen in the past. We're living in a really exciting time. It's almost the year 2019. But what we see are banks really being constrained by legacy architecture, by legacy systems. This is not a problem for just large banks or just smaller banks, right? This is a pervasive problem. A lot of systems are very old. They're complicated. They've got tangled systems, and as maintenance costs grow, those costs are growing faster than banks can really add value to those legacy core systems. Even small changes sometimes can require extensive testing. And so this sustainability of legacy systems, it's really uneconomical. It's not really a matter of if we need to change them, but it's how we're going to change them. I think everybody recognizes that with probably everybody in this audience having a smartphone in their pocket, the pace of digital change, the need for digital banking transformation is just something that cannot be ignored. As I mentioned, so it's not just a large bank or small bank problem. What we see, in our larger customers, these are banks that very often have large digital budgets. They have digital transformation teams. They have lots of people thinking and working on this, but their systems are very often core banking systems installed 20, 30 plus years ago, expensive to rip and replace. We see mid-size, small-size banks that really, they want the same digital and mobile and data analytics capabilities, distribution capabilities from their larger bank peers, but very often they don't have to change the bank budget. They've got smaller staffs. They very often don't have a group of digital innovation change teams that the larger bank peers have, but they're also captive to legacy technology, legacy processes. And so what we do see, though, are new banks, new financial service offerings in the market that are driving change to traditional banks. We see, neobanking platforms, all digital platforms. These are new market entrants that don't really have the weight of legacy systems. Very often everything is 100% digital, no branches, it's all mobile. We see incumbent financial institutions, incumbent banks creating new digital brands. Challenger banks, we see this a lot in the UK. So some of these entrants are new institutions that obtain banking licenses. Some of these are just FinTech firms that work with a custodial bank but have the 100% new digital infrastructures. So, we see examples like Solaris Bank with funding from BBVA and from Visa. We see Marcus, digital brand from Goldman Sachs. We also see a lot of banks really starting to embrace cloud. So if we pull back for a moment and we look at, drivers of change, we can look at examples like Starling Bank. This is a bank deploying a new core banking system developed in-house, deployed on Amazon in the cloud. Clearbank is the first clearing bank in the UK, the first new clearing bank in 250 years, deploying an application on Microsoft Azure. We see Fidor Bank. This is a European bank, again, embracing cloud. So what we do see, though, is the trend toward cloud and is the trend toward FinTech partnerships. I think one of the things that is really table stakes for the digital future is the realization that it's really going to be, without help, without engaging FinTech partners, impossible for banks to innovate fast enough given the pace of digital change today. So, Darren, let's move to the next slide, please.
Sure.
Okay, so we do see cloud adoption. We see more and more acceptance for cloud-based banking. We see changes of attitude. There are new ways of thinking about how financial service and financial products can be offered. We see a movement toward really breaking down some of the barriers that wouldn't even allow the thinking about banking in the cloud and as-a-service banking before, in particular around the regulatory environment, around thinking about security. One of our customers is a bank who's has publicly said they're going to move all of their banking applications to the cloud. So we do see progression toward the cloud. And let's move to the next slide, please, Darren.
Sure. Just a quick follow-up on that, because I think you made a great point that I think is important, is what were the limitations on going to cloud before? I mean, it seems like a lot of businesses are either already there or well on the path to migration up into the cloud environment. What was it about the financial services companies that limited that migration? And what are they now able to take advantage of today that's beginning to enable that process?
Well, a lot of it is based on the type of application and suitability, and I'm making air quotes. What does suitability mean? Well, it means that there are some systems that, by their nature, don't contain necessarily sensitive data, that are easier to move to the cloud, that are smaller applications. When you look at core banking applications, because of the sensitive nature, the personally identifiable information in these applications, and just the regulatory scrutiny that banks are under for the protection of data. Those are things that slow progression to the cloud. However, really the realization is starting to be perceived that cloud providers and the management of infrastructure can be done in a much better way very often at economies of scale than banks can provide themselves. So the notion in the past of I'm a large bank, I'm secure, I can do this better than anybody else, is starting to be broken down. and we're starting, to see that then naturally, the progression toward looking at the cost of ownership, the thought inside the bank of I'd like to be a bank that thinks about the next generation of products and services that I need to offer to my customers. I really don't want to worry about infrastructure. I don't want to agonize over that. I don't want to have a large IT service staff if I can avoid that. I want to be a bank, right? And I want to think about compelling products that I can sell my customers. So that's been driving that. I also mentioned FinTech Partnerships, and really the realization today that innovation and the global force around the planet today with ubiquitous technology, thinking about how do I take technology and the latest technology advancements, and how do I make that digital technology easier so that customers can bank with me whenever and however they want, and I can leverage that technology to get more insights, out of data and to run the business of banking more efficiently. We see FinTech engagement really progressing in the future in a number of specific areas. Terry talked about microservices, but as a technology, the way that we write applications is changing. It's becoming much faster, and so I need a way to embrace this type of technology for offering new banking services. In my business today, the business of banking, we see the speed or the need for speed around being able to open accounts, onboarding, making the process of when a potential customer wants to buy a banking product, making that very fast, very efficient, very easy. We see a trend toward gamification. So there are generations now of potential customers that have grown up with the notion of gaming, and can we digitally make the art of banking fun, and so that I can use that to attract customers. Yeah.
Interesting. The concept is.
Yeah.
Go ahead.
And so I look at my kids and really generations that have grown up with gaming, and so can I make products sticky by making them fun? Of course, artificial intelligence. We see incredible advancements in the areas around AI, around decisioning, around risk management, and blockchain and distributed systems of record. There are certain areas of banking where we see this adoption, in particular the lending space, distributed contracts. For core banking, just the ledger transaction processing and ledger keeping, blockchain is really not there yet. There's performance reasons, and when you talk about being able to sustain and drive, transactional banking, there's a purpose, right? So when we talk about blockchain, it doesn't solve every problem, but the notion of distributed ledgers is there, and it's not going to go away. So APIs, as Terry mentioned, and as we saw in the last polling question, are a critical technology for working with FinTech, for being able to deploy, and to engage technology partners and providers to really help, with the advancement of all of the things that we've just discussed. So I think, Darren, if we have the next polling.
Yeah, let's move to the next polling question and find out what our audience has to say about API ecosystems. So, question on the table for everyone is: what is your organization's view of API ecosystems? One choice is they're a differentiator. They're an element of change. They're a commodity and should be provided. We have something that we've been building for decades. So basically, APIs is an in-house construction. So please take a few moments, take a look at the options and select one. There might be a couple that apply to you, and you just pick the one that you feel is probably closest to what you're looking for. As we're waiting for everybody to reply, Scott, looking at APIs, ultimately, do you feel that APIs are going to be like microservices, sort of the next, or ultimately the way the industry is going to have to go? Or do you think that more organizations are still going to continue to build in-house and just connect out to FinTech partners when they absolutely feel the need?
Well, APIs are becoming table stakes for how systems are becoming interconnected. The word API is not new. That acronym has been around for more than 2 decades. Back in the 90s, you can go back and look at things from offerings from Microsoft, and everybody had APIs, but the APIs were written in different programming languages. If I was a network communication provider, or even if I'm Microsoft, I had a Windows API so that I could write GUI windows and hook text boxes and buttons up. But what APIs mean today is really different than what API meant 20 years ago. And so what we have today, driven by the technologies of the internet, is we have standards for how, it doesn't matter what software I use to create applications, we have standards driven by how things communicate over the internet for how to connect systems. So, APIs are just they are just table stakes for how I connect now systems both inside my bank to the outside world, and how I connect systems to systems just in general. And so when we look at Europe, we see PSD2, right? We see regulators saying you must open the bank. APIs are the de facto technology for that. But APIs are also solving problems with how I connect into older legacy systems with newer things being invented.
Great. Well, let's see what the audience has to say about that. So very strong favor in terms of being a differentiator and provide the path forward. About 15, 16% think they're a commodity and should be provided by the legacy solution providers. Doesn't appear like anybody's still focusing on building them internally. So it could be, like you said, that they're becoming more of a commodity that is more freely traded on the marketplace, as it were. So as we think about what the future of what we currently call the core system might look like, I know, Scott, you wanted to talk a little bit about Nextgen, looking forward. What do you think the industry might be looking towards in terms of the next model of core banking?
Sure. Yeah, Darren. So when we look at all of the issues we've discussed around complex legacy systems, we talk about generational expectations, gamification. What do the next generation of potential customers want and expect out of banking applications? We talk about the neobank platforms that we see today that are new next generation competition for incumbent banks, what challenger banks and neobanks are doing. And then we also have talked about really cloud and at the cloud tipping point for adoption of cloud-based technologies. Now, if we take all that, bank infrastructure, capability, next-gen capability that we need, digital connectivity that we need, what we see is the need to put that into a box and virtualize it, what we call a bank in a box. And so a bank in a box is a new offering that we're going to be bringing to market, available June of next year, which is core banking application, but available as a service in the cloud. It's an integrated solution with partners providing different aspects of capability for banking systems. Out of the box, offering digital omnichannel, again, cloud delivery for deposit and lending products. We have APIs And when we talk in or just saw the last poll question about APIs as that differentiator, right? These are APIs that the banks can offer for FinTech integration. But the running of the bank, the systems, infrastructure monitoring, help desk, and being able to scale as business grows, because that's important, right? As a bank, I need to grow the banks, right? I need to grow deposits. I might be a already large bank. I might be a smaller bank with larger aspirations. I need to do all of this, and I don't want to manage that infrastructure. So this is what we call, again, bank in a box, core banking system, open, digitally agile. And what it allows us to do is really allow our customers to offer banking services that are digitally innovative and be thinking about, how I do banking. So, Darren, if we could turn to the next slide. It's
sure, absolutely.
Really also, okay, so it's intended to help banks really focus on banking, about being a bank. So that banks can focus on their strategies to grow the bank, think about products, think about pricing, thinking about growing deposits, thinking about how they can do different types of lending, being able to scale, being able to pay for ways and not buy hardware, buy the capacity when I need it, when I want it. And again, think about everything in terms of how fast can I get to market with new innovative ideas, and how can I also recognize that I will have to embrace FinTech. There will be continuing digital innovation in the industry. So how do I work with that and work with FinTech partners? And I think the cool factor about this is then it can allow banks, in particular banks that don't have the ability to have large staff of folks that are thinking about digital innovation, to think about themselves as startups. Experimentation is important. It's not possible to foresee everything, how everything is going to work when I want to develop new products or new ways of engagement in the digital space with the next generation of consumers. So, if I can lower that development cost, if I can make that time to market faster, and if I can fail fast so that I can try new things, I can get that reward, a greater reward with lower risk. And so, the really neat thing about this is allowing banks to think about things that they've never been able to think about before, often as a startup can think, and really freeing themselves from, the legacy mindset or the thought that I can't do things fast because I'm constrained by legacy architecture.
Right. Well, that's great. So let's jump ahead to the next poll question and see what our audience's most pressing needs are in terms of new capabilities. So everybody, I'd like you to chime in again. Tell me, what are you really thinking about? What is the drivers for your organization right now? Is it real-time data analytics? Is it artificial intelligence? 360-degree view of the client. You want to see them coming and going. You want to see everything that they are in process on. Or is it true omnichannel integration? You want to make sure it's all devices, all channels, all the time. Your customer is able to do whatever they need, whenever they need to do it. So we'll give you about 30 seconds or so to take a look at that. And just, Scott, while we're waiting on that, I wanted to just briefly touch back on the idea of scalability, because I think this new bank-in-a-box, bank-as-a-service concept that's beginning to become popular really enables that. And what do you think sort of the fundamental enabling of that is? Is it simply because it's in the cloud? Is it because we're taking out a lot of the material that was originally part of the system? Is it that we're able to right size it and right scale it so everything is customized for the audience? when it comes to scalability,
Yeah.
what do you think is really exciting about that?
Yeah, well, it's the ability to much more easily and in a flexible way change the capacity for the software systems that I operate. When I need extra capacity, when I, as a business planner, what I'm thinking about is how do I grow the bank? How do I, sell more products and services? How do I grow deposits? And when I do that, when I think about capacity, when I think, if I've got X number of customers today, in 3 years, I want to have X plus a delta, right? So I've got targets for what do I want to achieve. And, the capital planning, the budgeting, the expense of having to manage the infrastructure, the hardware for those systems, to think about the change, I'd rather be thinking about the business of banking than managing all of that infrastructure. And so that the cloud enables that capacity. It makes that elastic, it makes it fluid. It makes it much more of a simple and straightforward process to increase capacity when I need to. And so that's, again, coming back to the commoditization, of technology. So as new technological advancements, especially in the space, we see things that used to be hardware now being managed by software, for instance, software-defined networking. These
right.
are technologies that cloud providers are much more adept at providing for me. So I don't have to buy load balancers, and when I need to reconfigure networks, when I need something in the IT landscape, the cloud just makes that so much more efficient than I can do in-house.
Well, I think, to your point before, it really sort of shifts off the idea of I've got to come up with a big capital investment to buy servers, to buy people and the rest, and now I'm moving to an operational expense. I can scale based on what my actual needs are. So let's see what the audience has to say. Looks like we are definitely heavy up on omnichannel integration. Something where I need to be able to get to all my customers, whatever their device, whatever their location. Few people chiming in on real-time data analytics and a 360-degree view. So definitely some of the trends that we're seeing in the marketplace today. AI is coming up on the backside, but we all know that it is something that organizations are beginning to incrementally move forward on, like blockchain, and begin to develop new approaches on their own. So, well, at this point, I'd like to bring in our third member of the panel, who's been sitting quietly in the back, Tom Demchak. And Tom, Terry and Scott have been talking about core modernization, leveraging fintechs. From a bit more of an abstract angle, here's what we can do and how we can do it. You're really sort of boots on the ground. You deal with clients all the time. You really hear what their needs are. I'd like to get a sense from you on, what are you actually seeing in the marketplace with banks executing on modernizing their core processing capabilities? I mean, is there anything you kind of share with us in terms of what maybe somebody is doing that you find exciting or innovative?
Yeah, thank you, Darren. Building off of what Terry and Scott were just talking about, and spending well over 30 years of my career on the client side, I'm very much focused on implementation and real use cases. And we have a very interesting use case that we are actually in the process of implementing. There's a small bank in Oklahoma. This is a bank that has about 16,000 clients. Their asset under management is under $1 billion. And they looked at, and it's a family-owned bank, and they looked at, where they need to be strategically. Because with what's going on with a lot of this stuff that Scott and Terry talked about, all the competitive landscape, their considerations were, are they going to be consumed through the M&As as these smaller banks get consumed by larger banks, which is a trend that's happened. They have about 10 to 12 brick and mortar branches. Do they expand the brick and mortar? and grow that way? Or do they look at really growing digitally? Scott talked about some banks out there that are fully digital. And what this bank ended up doing was actually taking a hybrid approach. And they looked at first focusing on a customer-centric perspective. Coming out of the poll, a lot of the participants on this call, the preference was, number one, omnichannel. That's really where they focused on first, looking at the emerging channels. And what they are doing is they partnered with one of the FinTechs, a company by the name of Axiom, that has a omnichannel capability. And what they also did to grow their customer base is they are partnering with a social banking platform, which has a very interesting business model around loyalty and how you bring clients to the bank. And it's actually a shared revenue model as they bring clients, where this company by the name of Need, along with this bank, will be sharing the revenue. And from a technology standpoint, they knew they had to transform their core, and they needed to have a very cost-effective approach. And as Scott was just talking about in the cloud, this is a small bank. They don't have a large IT budget. They really have very minimal technology staff, so they're heavily dependent upon partners and integrators. And they ended up going on a 3-year journey to achieve their objective. They want to take that 16,000 client base and grow it to 500,000 clients within 3 years. That's their objective. And eventually even look at going international. And the way they're approaching that is, I mentioned a multi-channel. They're starting with integrating a multi-channel platform. They are implementing as part of that, since they're very much focused on customer-centric, they're implementing a digital agent, which is leveraging artificial intelligence around a bot solution that actually is one of the offerings that we have. And they're also looking at a biometrics capability so that they can really have a very strong customer-focused capability. So when a customer wants to access their accounts or onboard a new customer, they can do it through a mobile device or a stationary device. You don't need passwords. And if it's a new client, for example, within 240 seconds, we can validate that client is who he says that he is by taking a copy of a picture of their license or their passport. And these are the type of technologies that are enablers for this bank to really, really enhance the customer experience. And they also realize that they have to replace the core. So what they're looking at and in the process of implementing is starting with the social banking platform, also upgrading the front-end technology for their current customer base so they can grow that base, but also go fully digital. And they're anticipating a soft launch for friends and family by the end of this year. So that's going to happen within the next 2 to 3 weeks. And then the full launch in the first quarter of next year. And then from there, they start introducing new technologies because they have to be very concerned, and rightfully so, of the risk to the bank of being a little too aggressive. So their program is a 3-year program. They're going to be introducing analytics. They're going to be introducing different components. They're starting with deposits. Then they're going to go to loans. And so they're looking at both how do they introduce the technology, how do they expand their customer base, and how do they give the best user experience. And as part of that, as noted in the poll, real-time analytics is important. So they also have a data hub that's being introduced, and the clearinghouse has recently introduced a real-time payment environment. So they're also introducing a new real-time payment capability to tie into the clearinghouse. And this is all going to be run in Amazon Cloud. DXC is going to be providing the managed service component of it. So one of the key considerations, and it was mentioned by Scott, is also the regulatory framework. Banks are rightfully so still apprehensive to move things to the cloud, especially core processing. So there's been a lot of due diligence. This firm brought in an outside firm to do due diligence around making sure that what they're doing is compliant. And another key success factor for them is they have brought in their regulators from day one. Just last month, they had the regulators in reviewing their plans, making sure the regulators were comfortable with putting their core processing in the cloud, addressing regulator questions, and they're going to keep the regulators embraced throughout their whole transformation to make sure that there is a tight compliance and regulatory framework that is being introduced that will meet the needs of the regulator. And of course, the other key consideration is to make sure that it doesn't disrupt the current business. So it's a very, very interesting use case. It is a model that we see a lot of other tier 3, tier 4 banks, the smaller community banks, potentially looking at in regards to staying competitive. And it is very supportive of what Terry and Scott were talking about, from a overall strategy perspective. The execution of it is the key component. And this bank has a very interesting plan that right now is being executed very efficiently.
Right. So some great points. I mean, one, get ahead of your known pain points, right? You're going to have pain with your regulators. You're going to have pain with your migration processes. So make sure that you get ahead of those and build them into the planning session. I think you also had a great point where banks shouldn't necessarily feel like they've got to absorb all of the costs themselves. They can go ahead and share with their FinTech partners what some of those upfront costs are, as long as they're willing to share some of the share of wallet on the back end. So ultimately what we're doing is creating a more cost-effective environment for especially the smaller banks to be able to play in. So, hey, Terry, I wanted to sort of bring you back in real quick. We've got about 8 minutes left, and I did want to open up for a few minutes for questions. But I wanted to ask you, and Scott, you can chime in as well if you want, looking at the FinTech landscape, when you're looking at all of these different potential FinTech partners, just briefly, what are some of the things that you think banks should be looking at when evaluating a FinTech partner for a potential collaboration or being able to work with that bank to enable a new process or capability? I mean, what are some of the key things these clients should be looking for in a partner?
Well, clearly, nimbleness, agility. I mean, somebody that's adhering to an agile mindset, the ability to try different things in parallel processing, if you will, spawn multiple parallel streams, knowing that not all of them are going to be successful. Those are the kind of things that we look for whenever we're soliciting best of breed partners. But just to kind of add a little bit to what Tom was saying about what's happening in the industry right now, data aggregation and federation in financial services is really, really a burning platform. It's happening a little bit more offshore than it is in the States right now. But I know of one particular bank in Australia that is pushing the envelope really, really hard in terms of client stickiness. So whenever you apply for a mortgage, for example, with them, that whole experience aggregates data, all the data elements that it knows about you, and so it will aggregate and federate with various realtors, various insurance companies, leasing opportunities for automobiles, opportunities to update your appliances in that new home, et cetera, et cetera. So it acts as a financial advisor as you're going through the process of buying a new home. It's not just you deal with a realtor here, you deal with a mortgage company over there. They want to own as much of your financial landscape as they possibly can and offer you opportunities to manage those services for you.
Wow, that's great. I mean, obviously, the bigger the share of wallet and the bigger the share of mind, the more likely it is that a bank's going to be able to keep that client. Scott, any thoughts on what you look for in a partner, FinTech partner for the work that you're doing with Core?
Yeah, well, some of the experiences that we've gained are by looking at FinTech partners for our own bank in a box, and so there's both what the FinTech partner itself is able to do and deliver, the quality of the assets that they're creating, and the fit, right? So it's very often, I'm looking at how do I achieve a certain business objective with what the FinTech can do. So we're also looking for partners that are very open, willing to engage, willing to grow and to adapt. Very often the FinTechs that we work with are smaller companies. There's some very large and well-established ones and well-known. But part of the art here is finding the right partners that are really on that leading edge of innovative technology, and then being able to work with them and assess a large number of FinTechs that may be in the same space, and then with a funnel narrow that down. I think Tom's got some thoughts on that as well from some of the FinTech work that he's done. But assessing the number of FinTechs, distill that down, and then get a specific set or a number that then I can do POCs. Ideally, I'd like to do as a bank 1, 2, or 4, some number of POCs per year, trying out new technology, seeing what fits, and seeing how it's a fit for me, and then how I can use that to go to market and to digitally engage my customers.
Right. Well, that's awesome. We're almost out of time. I did want to see if the audience has maybe a question or two that we can go ahead and share. So if you've popped anything in chat, just let us know. All right. Well, I do have one question here. So how likely it is that banks can keep doing what they've done after all it's worked for this long? So final question, any one of the three of you guys can pick it up. Hey, you know what? It's worked for 40 years. We've seen legacy core out there. Is there a finite termination where you see on the future that just legacy core is going to have to stop? Or do you think banks can keep limping along?
Well, so I don't think that anything stands still forever, right? The push clearly in financial services space is client intimacy, and so that gets to the issue of stickiness and owning a deeper share of the client's wallet. The problem is generationally mindsets are changing. My generation that has a little bit more blonde in its hair these days than I used to have looks at things very, very differently than the millennial generation does. They're far less patient than my generation. And I personally have my finances spread across 4 different banks, depending on who's offering me the best service for what I'm looking for. So I may be an outlier in my generation, but millennials, the pressures that are going to be brought about to financial services institutions as a result of millennials' habits and patience, if you will, they would far rather have a root canal than walk into a brick and mortar bank for the most part. They would think nothing of changing to Google or Apple if they provided more banking-like services. So I don't think that absolutely no change is in banks' future.
Okay. Well, unfortunately, we're going to have to leave it here. It is always a pleasure to talk to the three of you. Terry Rupp, Tom Demchak, Scott Lorenz from Suitability FinTech and DXC Technology. Thank you, three, for joining us for the hour and walking us through core modernization and the future of the digital core. And to my audience, thank you so much for joining us. My name is Darren Jones, again, marketing with DXC and Suitability FinTech. And we look forward to hearing from you. This recording will be available if you'd like to share it with colleagues. And we will see you the next time around. Thanks so much. Have a great day.